program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you back with us here at AusBiz. Let's get across what happened overnight. Global shares mostly higher and Bitcoin rallying, having slumped in the previous session. On Wall Street, the major indices finished higher, buoyed by gains in tech shares as expectations build of a Federal Reserve interest rate cut next week. Among the mega cap tech stocks, Apple, Nvidia and Microsoft gained, while Intel jumped more than 8%. Boeing shares surged after the aircraft manufacturer forecasts high deliveries for its 737 and 787 jets next year. US listed shares of e-commerce platform Shopify rose as it says merchants achieved a record $14.6 billion in sales over Black Friday Cyber Monday weekend. That's up 27% from last year. However, Procter & Gamble shares fell after the consumer packaged goods company flagged a hit from the US government shutdown. Warner Brothers Discovery climbed on reports that it's received a second round of bids, including an offer from Netflix. The car maker Ford reported a marginal drop in US car sales in November as sales of its electric vehicles fizzled following the end of tax credits. And crypto stocks, including Strategy and Coinbase, rose as Bitcoin rebounded after its largest dollar loss in more than 4 years the previous session. Well, President Trump has all but given away who will become the next Federal Reserve chair when introducing White House economic advisor Kevin Hassett at a White House meeting and saying the next chair was present in the room. This despite the president saying he would announce his choice to succeed Jerome Powell early next year. Meanwhile, Russian President Vladimir Putin has warned Europe that it will face swift defeat if it went to war with Russia, and he dismissed European counter-proposals on Ukraine as being absolutely unacceptable to Russia. President Putin met President Trump's special envoys Steve Witkoff and son-in-law Jared Kushner in the Kremlin for talks on a possible way to end the conflict. US Treasury yields were mixed after being dragged higher on Monday by an increase in Japanese government bond yield on expectations of an impending rate hike in Japan. The yield on the 2-year note fell to 3.51%, the 10 years around 4.1%. And the US dollar index that regained ground, the dollar particularly gaining against the yen, recovering from Monday's sell-off, and the Aussie dollar has climbed to 65.7 US cents. Oil prices have fallen as markets watch for developments around the Russia-Ukraine peace talks. Brent crude futures at $62 a barrel, copper's down 1%, iron ore up 1% to around 107 US a tonne, and gold has fallen more than 1% as investors took profits following a 6-week high in the previous session. Spot gold trading at around $4,200 US dollars an ounce. And Bitcoin has rallied more than 6% to be close to 92,000, but still down around 30% since hitting a record in early October. Let's get across what we're seeing on markets with a focus on the US. John Blake joining us again from Zacks Investment Research. John, welcome back. Good to see you. So, interesting to see what's going on in markets at the moment. Obviously, fears about an AI bubble, they appear to have dissipated somewhat. Very much a focus for investors and the broader market on potentially that forthcoming interest rate cut.
Yeah, I think so, Andrew. I mean, what's interesting right now, we're talking on early December. This is almost exactly 3 years since ChatGPT came out. And every single company that's participating in this rally has a 3-year chart of improvement in its earnings and its revenues from that very moment. So there's no question that we've reached this place. And now in the last month or so, we've seen Gemini 3 from Google take another swing at ChatGPT. And back 3 years ago, Andrew, they used to say they had a code red. Google had a code red with ChatGPT. Now, this week, we're learning ChatGPT has code red on Google. So I think, we have, I don't know if bubble's the right word for it, but we've had a surprising amount of capital. We always thought about private capital, government capital, treasury capital. We didn't think about the big seven capital that was built in COVID and how they put it to work. But really, Andrew, that's what's going on here. We're having a 3-year code red moment for these giant companies that built up so much money during COVID.
All right, so you say obviously the focus there on Alphabet at the moment, which tends to be leading that race. More broadly, do you see those mega cap tech stocks leading into a potential Santa Claus rally?
I don't, Andrew. I think it's going to be a soft December because of what's happened with this Gemini 3 moment. I think, really it's been a long time since somebody took a look at, Nvidia's gross profit margin or even net profit margin in the 50, 60, 70%, Andrew. And what that says to us is that so many firms out there can target that profit margin by cutting, offering different chips, offering lower margins, whatever they can do. And that's typical competition. So I think competition, Andrew, is so fierce now. 3 years, there's no more sitting around. Everybody's gone to the drawing board. Everybody has a plan. So, seasonality is getting overridden by the fact that there's real, genuine threat to Nvidia and that profit margin, which is driving a lot of this earnings estimate revision and forward look at growth, in the double digits. All of that's built into the idea that nobody can compete with Nvidia, and that is no longer true.
John, let's turn to the bond market. And I was mentioning there earlier, just in regards to the potential for an interest rate hike in Japan, that had global consequences across treasuries. So how do you see that play out? And I guess also with that background of that looming rate cut in the US.
Yeah, Andrew, we got to remember something here. We're playing a hand, again, from COVID. And from COVID on, there's been QE. And we just also got, the last 2 days, more QE. So we're back to round 3. First round in 2008. Then we had this big round in COVID. And now we have yet another return to QE. What that basically means is the long end is being managed just like the short end. And that gets us to the JGBs in Japan because they are rising to, over a decade or longer since we've seen JGBs rise like this. And if Japan has an interest rate that's attractive to it, as opposed to 0%, people are not going to park money as adeptly in U.S. Treasuries. So there's less of a foreign finance interest in U.S. Treasuries, which means there's got to be a higher yield premium for those Treasuries. So again, people are saying, okay, great, Kevin Hassett's the new Fed chairman. We're going to get 2-3 basis, 75 basis point cut, 2-3 of them next year and a half, or maybe less. And the point might be that this is totally ineffective. It doesn't matter because of what's going on in Japan.
Meanwhile, geopolitically, a focus very much on the Ukraine at the moment with Steve Witkoff, the president's envoy, in talks with President Putin. Mind you, the prospect of a breakthrough there, looking increasingly unlikely. This is also potentially playing out for the oil market as well.
Oh, absolutely. We've got drones from the Ukraine and Black Sea taking down, those clandestine carriers of oil coming out of Russia. And there's no question that Russia is not probably going to ever concede through diplomatic means to addressing the situation in Ukraine. So at the end of the day, it's going to be a European decision to get tough militarily with Russia. And that, of course, spooks everybody, but that's really the only way you deal with Putin is you step up to the military plate. And that's what we're going to have to basically, get around to doing that. And that's another one of these buildup moments, just like ChatGPT. When did we start here with Ukraine in this war? 2022. How far are we in? 3 years? How much time does Europe have to arm and get ready for this? That's the question here, is that underneath all this, Andrew, is the momentum, military spending and adeptness momentum in place for Russia to really face heat from Europe. That's the thing that would end this war.
So, John, let's move to your 3 stock picks. And I see you've actually got a focus there on large cap tech stocks. What are you looking at?
Yeah, Andrew, I wanted to talk through this, granularity of what's going on with these AI cloud enterprise type situations. Again, the backbone of the cloud system came out of COVID. And so all the companies we're going to talk about today are cloud or data service providers. Vertiv is the first one. This is basically in Ohio. And there's a stock you could have bought, again, 2023 for $20 a share. It's almost $200 a share. So this is a 10 bagger in 3 years. And again, notice how little interest people had in data centers, even as late as the middle of 2023. It took a few months after ChatGPT, but now you can see, underneath the gyrations of that share price, you have this rising, production of earnings from their delivery of all these data centers. So now you got to look at the chart. We're back to 160 from 200. Is that just another share gyration, or are we going to see a 2028 story behind that 2027 number and take this out 4 years? That's the real question here for Vertiv.
All right, so that's Vertiv. Second one, Seagate. So this provides data storage solutions. What are you seeing here?
Yeah, Andrew, so Seagate, this has been around for a long time. They made a lot of money, but look at this chart. This is insane. So what's really interesting here versus Vertiv, in Vertiv you saw the share price rise from 2023 on. It was a ChatGPT data center story totally. People caught on to this one, Seagate hard disk drives, only after the Liberation Day moment, and that took us from 60 to 280. So not quite as big a rise from the Vertiv situation, and much, much later. So now you got to ask yourself, what makes sense here? Does hard disk drives, do people really need them for this AI business, or is this just another momentum trading play? So this is where I kind of get, when I look at a chart like this, Andrew, this is very bubble looking. And I look at the earnings estimates, and they're kind of coming down or kind of sideways at times. And I don't get a sense that the market really has this one right with Seagate.
All right, and just finally, John, a look at Celestica. So this is electronics manufacturing.
Yeah, Andrew, one thing to notice about Celestica, this, again, here's an amazing chart. We're going from $50 a share to $350. But again, later production and after the Liberation Day lows. So again, if you want to separate, Vertiv, which was the classic data center play tied to, super microcomputer and Nvidia, to these ones, you see all this is the last 6 months. So there really might be the case that one size does not fit all, Andrew, in terms of these data center plays. And these ones that are coming out of this Liberation Day moment, 6, 7, 8 months later with this type of chart, we should be very wary, because all this could be is a blow off top that we saw about a month ago. People won't know that until hindsight, but it's entirely clear here to me that this is the type of bubble stock chart you want to watch out for.
John, great to get across what you're seeing in your picks there. Thanks for joining us from Zacks Investment Research.
You bet, Andrew.
A quick look at where we're likely to open positively. SPY futures are up almost 0.25%. We're going to get across that, and bear in mind also later this morning, we're going to read on September quarter GDP figures. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.